The world's biggest fortunes are built on a simple idea. Technology changes everything. But behind every app, every device, every overnight tech empire, there's another story. It's a story not just of code or innovation, but of money. Vast sums moving quietly, reshaping industries and destinies. Tonight, we're pulling back the curtain, because when you follow the dollars, not just the headlines, you start to see how power really works. For decades, Americans have been mesmerized by the rise of technology. The stories are familiar. The college dropout in a garage, the visionary up late at night, the little startup that becomes a household name. Investors from Main Street to Wall Street poured billions into these dreams. Venture capitalists promised outsized returns, and pension funds staked retirements on the next big thing. The world wanted to believe that technology was a force for good, and, above all, for profit. In the early days, the optimism felt justified. Companies like Microsoft, Apple, and Google didn't just disrupt, they dominated. Their founders became icons, their brands synonymous with progress. The narrative was irresistible. With enough smarts and hustle, anyone could get rich. Money followed talent, and talent followed money. It wasn't just about building better products. It was about constructing empires. But beneath the surface, something else was happening. The money behind these empires wasn't always as simple as it seemed. Traditional investors gave way to a new breed: private equity firms, sovereign wealth funds, and shadowy offshore vehicles. The old rules didn't always apply. It wasn't just about profits. Sometimes it was about leverage, influence, or even control. As the stakes grew, so did the pressure. Startups learned to speak the language of growth at all costs. Revenue was nice, but scale was king. Investors wanted exponential returns, and founders promised the moon. With each funding round, valuations soared. But the higher the climb, the more precarious the balance. In some cases, the numbers stopped adding up. The flaw wasn't always obvious. Sometimes it hid in the term sheets, the fine print that gave investors special privileges, or the debt that quietly stacked up out of sight. Sometimes it was the business itself, a model that worked on paper, but not in the real world. And sometimes the flaw was cultural, a belief that the money would never stop flowing. Rehook. The trigger usually came quietly: a missed earnings report, a leaked memo, a regulator asking the right question at the wrong time. Suddenly, the illusion of infinite growth cracked. Investors who once fought to get in now rushed for the exits. The market, once so eager, turned skeptical overnight. Behind closed doors, the power shifted. Control clauses kicked in. Founders lost their seats at the table. Companies that once spent freely now scrambled to cut costs, lay off workers, or sell themselves to the highest bidder. For some, the collapse was swift and public. Think WeWork's failed IPO, or Theranos' spectacular fall from grace. For others, the shift was quieter, as the money behind the scenes tightened its grip. And always, the lesson was the same. In the end, technology empires aren't just built on code. They're built on capital, on who provides it, what they demand, and when they want it back. The real power lies not just in innovation, but in the deals made in boardrooms and back channels. Money shapes the rules, and the rules decide who wins. For investors and entrepreneurs alike, the story is a reminder. Technology may change the world, but the money behind it decides which world we get. If you found this perspective valuable, consider subscribing for more stories that follow the money.